Hi, it's Adil bringing you a review of the FTSE 100 from an inter-market analysis perspective. Okay, so just the day's wrap up. It's Tuesday, the 14th of October 2014. So just giving you an insight into today's trading and basically some key levels on the FTSE from a fundamental, obviously from a technical, and from an inter-market analysis perspective. Okay. So let's try and summarize the fundamental events first. Okay, so this morning we basically had inflation data. I can just focus just on the actual FTSE for now. Just try and keep it short and sweet. Okay, so overnight Asian markets obviously are down quite heavily, with the Nikkei obviously down. And we had the US markets flush in the last hour the night before, given Ebola concerns. Okay, well, that's what they certainly accuse the sell-off of being, but obviously additional concerns with regards to global growth, obviously hurting sentiment there as well. Okay, so obviously the main reason, from my perspective, why the US markets are down is because of Euro JPY and USD JPY. And that's so that's another topic. But for now, that's basically the script. So U.S. markets flush in the last hour. Ebola concerns down quite considerably. The futures, obviously, FTSE futures dented back down to 6,300 and lower potentially. So basically, today we had the in the morning we had Asian markets obviously down, Nikkei down, so obviously that hurt sentiment, but the FTSE managed to pick up, okay, and certainly move back higher. So as you can see there, the FTSE started off in the morning gap lower and obviously eventually pushed higher, attempted to close the gap, got as close as the 6370 level, got as high as 6365, putting a double top, and obviously the market reversed from there on. Okay, so basically the US markets and Asian markets obviously were hurting sentiment. That's the reason why the market turned sour in the morning. Once they put in the double top there, 6365, obviously utilizing your trend line, so use your trend line analysis. If you connect the pivot highs, that would have given you a perfect resistance level. Okay, so from that perspective, okay, so and then obviously we had the ZEW data. Okay, so initially the inflation data came out. So given the fact that the inflation data came out worse than expected or lower than expected, that's PPI, CPI, and every gauge of inflation that you can think of. Basically, the moral of the story, or the summation there, is that Mr. Carney is going to remain dovish for longer, and interest rates expectations are being pushed back. So obviously, if the cost of capital is obviously going to be low for a longer period than expected, given the fact that everybody was expecting interest rates in the UK, obviously one of the first central banks to start to increase interest rates, given the fact that Mr. Carney's forward guidance turned forward guidance, and then went and then actually backward guidance and then forward guidance again. So Mr. Carney certainly has been sending out conflicting messages, which sent the sterling almost up to 1.7. Now obviously 1.6 gave way on sterling, as we can see if I bring up a chart of sterling for you. So let's just have a look at a chart of sterling, if I can find it amongst all this. Here we go. Okay, so given the fact that the 1.6 level has gone, I mean, as we speak 1.59 is going as well. Let's see if I can bring up a 4-hour chart, give you more of a... So as you can see here, inflation data came out. Obviously the sterling has been selling off ever since. If you bring up a daily chart of sterling, as you can see here, 1.7 level, 1.72, and we've been selling off ever since. And obviously given the inflation data, as we all know, rate high expectations have been pushed back. Therefore obviously the interest rates are no longer there, so expectations have shifted. Now this helps the FTSE in two ways. Obviously, one, lower borrowing costs, given the fact that interest rates are going to remain lower for longer, and two, obviously exports, given the fact that the FTSE 250 and 350 are comprised of companies that are heavily reliant and dependent upon exports. Then that certainly puts a base there. Okay, so bear that in mind. So those two factors there were definitely bullish, and obviously that sent the FTSE higher initially. So if I go back to my chart again, so if I bring up my FTSE chart here, okay, so as we can see, we did have a potential uptick with regards to the inflation data, as you can see there, pivot high around the 930 level. Then the market started to sell off. Why did it start to sell off? Because the ZEW data was leaked. Okay, the ZEW data was supposed to hit the market around 10 o'clock. So obviously people had access to that information. That's the only way you can explain it, because otherwise the FTSE should certainly have started to move higher. Also, the other reason why the FTSE obviously may well have come under pressure was due to the fact that obviously Asian markets were down overnight, and obviously Ebola concerns and so on and so forth. Okay, so the market obviously flushed. This is something that I got caught out on because I decided to go long once the inflation data came out. So I went long on my day trading account from 6342, and obviously my swing trading account at 6355. Okay, so basically that's what I attempted to do. So I did go long, and obviously I did pretty well. Initially we did have the sell-off because of the ZEW, and that was hurting sentiment, given the fact that the ZEW survey and economic sentiment and current situation and industrial production all came in much weaker than expected, and obviously that did have a temporary effect knock on. But given the fact that Daimler's earnings came out much better than expected, and obviously worse data, bad news equals good news in the sense that it basically leads to QE, and we had several comments out of Germany with regards to growth maintaining itself, and this is just a temporary blip, and obviously talk about QE resurface, and obviously that helped the European markets to stage a rebound. Adding the fact that we had stronger earnings out of the US, okay, that also helped to stage a rebound, and that's basically where we are. So from a FTSE's perspective, the fact that Mr. Carney will be forced to be dovish now, given the inflation expectations. Although we do have some more data out tomorrow, so watch out for wage growth. Any signs of wage growth there will obviously put pressure on Carney again, given the fact that other economic data is coming in quite stellar, the employment situation, etc. But with these central bankers, whenever the economic data starts to come in line and obviously come in accordance with their so-called forward guidance or their criteria for raising rates, they always find some other excuse, such as Miss Yellen's wage growth excuse. Okay, so given the fact that the economic or unemployment rate is dropping and making a new low in terms of the unemployment rate, and other economic indicators are all coming in strong, then they'll essentially just end up pointing to wage price inflation, okay, or wage growth. So and so the argument then is deflation. So I'm not going to go into that. That's another area that I can do a whole new video on, okay, given the fact that I have an economics degree, and that's my background, predominantly fundamentals, but I'll just focus on obviously technicals, and I won't go into depth with regards to fundamentals. Okay, so basically the underpinning here with regards to the FTSE, we have a 10-minute chart, as you can see. Okay, so we broke this falling, expanding wedge pattern on the 10-minute chart, as you can see here, and obviously the markets broke higher. Okay, so that's basically what we were observing. Okay, we did have this inverted head and shoulders pattern here. So this was your left shoulder, this is your head, okay, then we came back, retested, and obviously broke out. The pivot low was around the 6305, your neckline was around the 6345, so 40-point move, so you're looking at 6385, and that's exactly what we got. Obviously the resistance here, which I explained, was going to be solid resistance around the 6380, 6390 level, and we did get that. We did actually move higher, so the next resistance level here is going to be 6410, and obviously gap fill. So watch out for gap fill resistance. That's something that I expect to hit potentially tomorrow, the day after, given the fact that Intel earnings have come out much better than expected. So that certainly should, and obviously US earnings have come out strong as well. So that's the situation on the 10-minute chart. So watch out for gap fill 6430, resistance, horizontal resistance at 6410. Okay, they're the two levels to watch, and obviously we've already breached the 6390 level now. So 6390 will be acting as support. The moving averages are all starting to be turned bullish, with the 20 MA pending crossover the 200 MA, and obviously everything certainly seems to be bullish on the 10-minute chart, with higher highs and higher lows intact. 60-minute chart, inverted head and shoulders formation. So the neckline is 6390 going down to the head, or the head at 6290. So you're looking at 6490 target. So given the fact that we've got this falling expanding wedge pattern, so expect the upper range to be potentially touched, which will again coincide with that 6490 level. And obviously if you do break out of this, then obviously the 200 MA is next, and you can look at the potential horizontal resistance in this region here and horizontal resistance up here. So these are the two levels that we watch out for, okay? And that's basically what we'll be observing from that perspective, okay? Now let's look at the larger time frame with regards to the FTSE 100. Okay, so let's go to our larger time frame. So if I bring up my FTSE chart, okay, so the ones I observe here, FTSE 100 bottoming tails. So I've obviously shared this chart now a few times, okay. You can see here horizontal support around the 6315, which obviously held well. We have put in two bottoming tails now. One can argue, if you are in the bearish camp, that this is just bearish consolidation for another move lower. From my perspective, given the fact that I've looked at the CRBQ, the GCC, which I've already put charts up for, and obviously the USO now all coming into potential support zones, and given the fact that Intel earnings and other earnings are all coming in quite strong, that should certainly put a floor in the market, okay. Obviously, any geopolitical events, any events out of Asia overnight, the situation can shift very quickly. That's why it's usually harder to day trade. Sorry, not day trade. So it's harder to swing trade because obviously you can't account for all the exogenous variables, even the endogenous variables. You can't always account for, because the further out you go, that obviously it becomes harder for you to forecast. So, from my perspective, my expertise is day trading. That's what I do predominantly. And it's very easy to react to variables that come in. Okay, so from a day trading perspective, obviously, just generally speaking, previous support equals resistance. So 6450 will obviously be a key level on the upside, and obviously upper channel resistance as well. So we'll watch out for that, and then obviously react accordingly. If you do go past that, then obviously you're looking at 6530, a key level of resistance as well. Obviously, previous support equals resistance in this region around the 6500. So that's basically what we're looking at. But in the meantime, bottoming tails certainly are looking promising for a FTSE bounce. Let's have a look at the other variables. So the FTSE 250 is usually the next one that I tend to observe for all those that wanting to learn how to trade, obviously in real time. Okay, FTSE 250, as you can see, horizontal support. We have got a bullish engulfing candle, so that's promising from a technical point of view, and also given the fact that, like I've explained, one, a lower borrowing costs, so interest rates remain lower for longer, and obviously sterling falling quite substantially, given the fact that so that will obviously be a stimulus for exports as well. So there's two variables to propel this higher, adding the fact that stronger US earnings and obviously Intel overnight as well. So there's all arguments for a potential move higher. So that's the FTSE 250, the FTSE AIM all share index. This has been one hell of a downtrend. We are finally coming into potential support. Now, we did put in a doji candle today, so that's a promising sign at horizontal support. So this is a key potential reversal signal here. So given the fact that we've had a doji, given the fact that the market's been under intense pressure, okay, so that's something to watch out for. If that continues to slide, then I'll be certainly concerned with regards to the FTSE 100. Now, these are all the variables I observe in real time, whilst obviously day trading the market. So the FTSE 350, again, similar pattern here. Obviously, we held horizontal support. That's one of the reasons why I went swing long on the FTSE. Obviously, we do need to take out this red candle, so 3490 level. If you take that out, then obviously the bull argument certainly becomes more convincing. But for now, we are consolidating within the red candle, so we do need to have an outside bar for us to really move and propel higher. And each day as it comes, okay, each day as it comes. So that's the analysis on the FTSE 100. Now I can go into the market in more depth. I mean, I have the mining index I can certainly comment on. I've got the pharmaceutical index I can potentially comment on, because obviously, and look at it in much more detail. But I think that'll take too long, and this video will become very lengthy. I do try to keep the video short, just to give you a summary of exactly the price action, etc., what's happening throughout the day. Okay folks, so risk on, risk off, wax on, wax off. Goodbye now.